Sam, welcome to Real Vision.
Thanks for having me.
It's a pleasure to have you here. A great deal to talk about. You, of course, are the CEO of FTX, the crypto exchange, CEO of Alameda Research, a crypto liquidity provider. You're also co-founder of the Serum Project, a DEX or decentralized exchange. So much to talk about on all of those points. But I really wanted to start at the beginning and get a sense of your journey into the space. A couple of years after the Satoshi white paper came out, you began studying physics at MIT. Give us a little bit of context. Why physics? Why MIT?
Yeah, I was sort of into, you know, quantitative subjects when I was young, and anyway, still am. And I think I really liked the culture at MIT. I really liked being around a lot of other people with similar interests. And it seemed like a place that I'd be able to grow. I think particularly as a person. And I didn't really know what I wanted to do with my life. I sort of, somewhat randomly, started on physics. And I think one thing that I learned at MIT was that I probably didn't want to do physics full time.
So how did you get introduced into crypto?
Yeah, so after graduating, I went to work for Jane Street Capital on Wall Street for about 3.5 years, trading ETFs. Had a really good time there. And 2017 came, felt like it was time to start my own thing. So I left, and this was when crypto was really booming. For the first time that it became sort of a global phenomenon,
Yeah.
and huge amounts of attention around it, and basically, I just sort of felt like there were really likely to be good opportunities, especially trading in it, given sort of the amount of demand for it, the amount of attention, the amount of volatility, and likely the lack of, liquidity being provided in it, given how little time it had been a big deal for, and, probably not many institutions had really gotten set up in it yet.
Yeah. I should say for people on the crypto side, Jane Street is a trading firm, a kind of legendary trading firm, a prop trading shop, HFT, market maker, lots of very sophisticated technology with a reputation for having some of the smartest guys and gals in the room working there. How did that experience come about from being a physics major at MIT?
Yeah, so the truth is that that's like actually a somewhat typical pathway there. And if you're a physics major and you decide you don't want to become a physics professor, like what are you going to do? And there's this actually interesting, not great thing in the field of physics right now, where 80 years ago there were a ton of discoveries, and there's a ton of money being thrown at the field because of because of World War II and then the Cold War. But over the last 30 years, the discoveries have slowed down and the money has slowed down as the Cold War ended. But the reputation sort of lasted a fair bit longer. So there's sort of a glut of people going into physics in some sense, relative to, certainly something like biology, which I think maybe had seen a little bit of the opposite trend. And, so there wasn't necessarily a whole lot to do. But on the other hand, I think Jane Street was largely looking for people who were just like smart and good quantitative thinkers. And, I think like physics was a natural place for them to look.
So tell us a little bit about what you did at Jane Street and how you became engaged in markets.
Yeah. And I think that like I did a bunch of stuff there, and some of it was sort of building out automated trading systems and OTC systems. Some of it was real-time management of trading, intervening and, deciding what trades are we doing, what trades should we be doing, what's the difference between those, and what do I have to do to get us there. In general, the goal was just do the best trades you can, using whatever skills you have. And so I think that there was sort of, a mesh of a lot of approaches taken. I sort of really like that environment of, starting from sort of, square one of like the goal is to do good trades, and then figuring out, how automated it should be, how manual it should be, what the tools should be, what algorithms you should be using, rather than sort of starting with like, this is the tool we have, now let's see what trades we can do with it.
Yeah. Obviously, ideas that would pay dividends, obviously later in your career and some of the other things that you've done. Let's talk a little bit about how and why you spun up Alameda Research.
Yeah. So, when I left Jane Street, it really was sort of an unprecedented crypto boom. And, just the number of people getting into crypto was massive. And that meant that the demand for coins was massive. It was all over the place. I mean, it's you see two people walking down the street and they're probably talking about Bitcoin. Um, and so really, really big demand for crypto. Um, but because basically it gone from nothing to a huge deal in terms of how most of the world saw it, in a matter of months, you know, market makers weren't really active there. And so what we found was basically like, this sort of sector that was going wild, and had very little liquidity. Very few people who were doing arbitrage, market making, or other things. And so what that meant was, let's say that you come in to buy, $10 million of Bitcoin on Bitstamp. You just start buying there and the price starts going up. And it's not going up on other exchanges. And all of a sudden, Bitstamp's trading 2% higher than any other exchange. And the more you buy, the more it goes up. And that just happened, And there's this giant arbitrage that would set up. And the reason it was setting up was because there's no one doing the arbs, at least not in big enough size to keep things in line. Like fundamentally just like people were trading bigger size than the liquidity providers could handle. And so spreads were just blowing out all over the place. All over the place, there are ways that you could, do, a 2% good trade between two different exchanges. And that was kind of the core draw, was just like, look, it looks like there's actually quite good arbs here at sort of an unprecedented scale. Like usually when you're trading things in finance, if you can find a trade good by like 1/10%, that's a great trade. And you take it, And
Yep.
here all of a sudden there are trades good by percents. And the size wasn't trivial. It's trading tens of billions of dollars a day globally. And so, theoretically, you could get real size off doing this.
Maybe we could just define a couple of terms for people who may not be familiar with them. Market maker and liquidity provider probably being the two most important.
Yeah. I mean, they're people sort of talk about them a little bit differently. I generally think of them as basically the same thing. And the way I think about it is basically the following. It's, go back to this Bitstamp example, right? You've got, Alice, and Alice is buying a ton of Bitcoins on Bitstamp, right? And all of a sudden, Bitstamp Bitcoins are trading 5% higher than any other Bitcoin in the world because she just keeps buying them, Now, theoretically, all Bitcoin should be trading at about the same price, right? And what keeps that in force? Well, it's these market makers, or you can think of liquidity providers, arbitrageurs. They're very similar concepts. And what someone needs to go is go on Coinbase, go buy some $10,000 Bitcoins, send them to Bitstamp, and sell them to Alice for $10,500, right? And so that person is doing an arbitrage, right? They're buying a Bitcoin low and selling it high and making sort of a guaranteed return theoretically on it. But at the same time, they're providing liquidity to Alice on her Bitcoin purchases and stopping them from blowing out the market even more, right? They're keeping the markets more in line with each other. They're buying up GDAX and selling down on Bitstamp until their prices converge. And if they're just sitting there 24/7 ready to do this with bids and offers out on both exchanges at prices they like, that's sort of what we think of a market maker or liquidity provider as doing. And they're doing it because it would be an arbitrage if they got filled. And so the concepts really tie together. And by doing arbitrages, you make markets more efficient and you're providing liquidity to wherever the demand is coming from.
Yeah. I mean, some of these stories that I've heard you tell about the early days at Alameda are just fucking bananas, right? 20-something-year-old kids queued up in line at Japanese banks. Tell us a little bit about that, what it was like in those days and those stories. I mean, it's just surreal.
Totally. And what happened was basically the actual trades were often pretty easy to find, right? Like, you just like look at what Bitcoin's trading at on every exchange. You're like, well, that's a big number. That's a smaller number. I guess there's an arbitrage there, right? This wasn't sort of like, doing like extremely complicated math or like tons of research on products. It's sort of like, that just sort of stood out. So okay, so you found an arbitrage. What's step two? And what you run into is that the space was just, it was not very developed. The infrastructure is not very solid. And that meant that, like, even if you found the trade, that didn't mean you could make money.
Right.
And, just starting with this, Coinbase versus Bitstamp example, right? You send money to Coinbase to buy Bitcoins. That's step one, right? And then your bank account shuts down because, JP Morgan doesn't want to deal with crypto and you just sent money to Coinbase. So you just lost your bank account. So now you got to go and find a new bank account. Somehow you solve that. You go, you buy some Bitcoins on Coinbase, and then you realize you have $1,000 a day of withdrawal limit. On Coinbase, you can only do this, you can make $10 a day, right? And you file a support ticket to get it raised, and they've got a 3-month backlog. So, by the time, like, the trades aren't going to be there by the time that support ticket gets parsed. And whatever, you sort of keep going through this, and thing after thing after thing breaks, right? And the actual Coinbase Bitstamp arb, those are the two biggest things, were the withdrawal limits and the banking.
By the way, for people who aren't in finance, this is kind of a surreal concept. Finding the trades is supposed to be the hard part. And the back office functionality is supposed to be the stuff that just works seamlessly. But when you have these incredibly new markets and an absence of infrastructure, you have this weirdness that you guys were able to capitalize on. It's really like something out of a movie.
Yeah, no, it's absolutely right. And as you said, like, normally the way you think of it is like, you're going to go do a trade, great. Just go, once you find a trade, like if you buy Apple on NASDAQ and sell it at NYSE, you're done. Like those settle into the same thing, right? It just automatically that happens. And JP Morgan is never like, oh shit, you want to buy Apple on NYSE? We don't deal with NYSE anymore. I'm sorry. Can't buy there, right? But in crypto it absolutely happens. And yeah, that's exactly right. Like the trades were a lot easier to find, but actually doing them, you had to set up weird infrastructure and you had to negotiate with a lot of counterparties and somehow get them to allow you to use their product and pay them fees. As a weirdest part, we're just like calling up all these people like, we want to pay you money. Our goal here is to use your product and pay you money. And if you want overcharges, do it. We're happy to pay more money. Just please give us an account. And like, we'll think about it. And we're like, anything we can do here? Like, what's your worries? They're like, we just got a lot going on. It's sort of like, well, what are you doing? And he's sort of like, well, I don't really do much. Like, but your company's got, we got a big backlog. Can you help me? Sorry, I can't. I'm not authorized to do that. Right. And it's just like these companies were not ready for this, right? Like they'd gone from sort of like companies making $5 million a year to companies making $500 million a year in the matter of 6 months.
Right.
And they weren't built to scale. And they had all these growing pains and they had no idea how to handle the demand. They're constantly crashing because whenever people tried to trade big, they the product would just crash. You try and withdraw your funds and like sometimes just take a few days and like it's unclear why, it just would. So okay, but that was an easier arbitrage because that was all in the United States. Now let's say you wanted to do that in Japan, right? You want to buy an American Bitcoin and sell it in Japan. And you might want to do that because as it turns out, Japanese Bitcoins were consistently trading like 5 to 30% higher.
That's
than
massive.
American Bitcoins, which is massive. You never see ARBs that big. And it's $1 billion a day on both sides. So it's just like unheard of numbers. And, okay, so you buy your Bitcoin. Okay, your bank account's gotten shut down again. So you have to go deal with that. You get your withdrawal limits raised somehow, right? You send it to Japan. Now you realize, oh shit, like you got to be Japanese to open up a Japanese exchange account. You also had to be American to open up the US stuffs. I don't know, maybe you're Japanese, American, Japanese, right? I don't know, right? So somehow you solve that. You start selling this for yen in Japan, and now you realize, okay, well, you go through the withdrawal limit dance, and then you realize that they're not going to let you wire money out to an American bank. They'll only send Japanese yen to a Japanese bank. So now you gotta go get a Japanese bank account, but they'll only do it for Japanese resident, and you're also a U.S. resident presumably. So you've got to solve that, and now you're a Japanese resident, and you try and do this withdrawal, right? And the Japanese bank is like, oh boy, this is one of those new Bitcoin things, isn't it? We're like, yeah, it is. So like, I don't know if we're allowed to touch that. And we're like, you actually service that company, you bank them. And they're like, well, it's sort of against our policy to support crypto. Like, you literally, this is an internal transfer. Like, you're banking the account that's supposed to send to us. They're the company servicing us. How can you have a policy against crypto if you're the primary bank for crypto exchanges? And okay, so you go through that, and eventually they also, by the way, they don't speak English, so I don't know, somehow, right, you get a Japanese speaker. And finally, you like do one of these withdrawals, and you try and send wire, and they're like, well, you can't do that online. You have to do that in the branch. Like, well, you're like, yeah, you can't send wire transfer online. So, by the way, that's true in America too. So we had people spending hours a day standing in banks to send wire transfers, so they wouldn't let us do it online. And finally, we sent the wire, and they're like, wait, you sent this yesterday. This is a mistake. We're like, no, we're sending it again. It's like, no, you sent this exact one yesterday. Like, yeah, that's right, we're sending it again. And they're like, but the way it worked yesterday. Like, yes, this is a new one. And they're like, but you already sent the money out. We're like, yeah, more money came in. And now they're like, wait, you're telling me that 2 days in a row, you're sending an international wire transfer, cross currency, cross continent in the same direction for the same size with no transfer coming the other way. We're like, yeah, that's right.
AML, like, KYC,
right? Exactly, right. They're like, that's sketchy as shit, right? Where's your money coming from? And we're like, well, it's fake internet money. And they're like, oh, that makes us feel better. As it that whatever, we get some lawyers on the phone with them, not because they don't know anything we don't, but just, I don't know, they're lawyers. They like sound professional, They're like, no, they're doing arbitrage. The bank, this is a bank teller, by the way. It's not like a branch manager. The bank teller is like, I have no idea what that is. And they're like, it's finance stuff. I'm a lawyer. Like, okay, fine, but like, why is it going one way? And they're like, well, because this Bitcoin arbitrage, whatever, we're lost. And so eventually, finally, you're allowed to do this, but you have to send dollars out, not yen. So you have to turn your yen into dollars, and you also, they upcharge you if you do that in person. You have to do that one online, but you can only do $100,000 at a time, and it's like 5 minutes. Because their site is terrible. Like, it's literally like you click on like send, it's like, then it takes you to the next prompt. It's like, please confirm the amount. You type it in again, and but also we only had like 15 minutes between when the yen hit our account and the international wire transfer.
I mean, it's like a Michael Lewis movie.
Yeah, it is. It is this ridiculous sort of set of hoops that we had to jump through.
And what's the scale you're doing on these at the time?
Well, it was increasing. And it's, our first trades we're doing for thousands of dollars and tens of thousands. By the time we get here, it's millions to tens of millions. And right, so that's the other thing, right? We're trying to send $10 million a day of wire transfers. And literally, this is a rural branch. Like, it's just a bunch of grandmothers like cashing $100 checks. And then it's like random German dude. She's like, yes, another $10 million, please. So they were not used to that. I think we're well over half of the volume of that bank branch for a month. And probably both sides, honestly, like, are sort of like dinky, branch we're using for the USD. It was also like, it's just like all the tellers would stop what they're doing when we came in each day and like kind of gather around and like, oh, you're gonna need the branch manager approval again today, aren't you? Like, yes, definitely. Yeah, no, it was very fun. It was very cool, and it was very absurd. And it was, it was also one of these things. I think one of the big takeaways was like, I'm sort of describing the end state here, or rather just sort of like skipping over what happens when we hit a roadblock. But those roadblocks took weeks to get through each. Right. And there are like 30 of them. And when we gotten through 20 of them, it can be really dispiriting, right? Because you've like done all this weird shit, right? Like, somehow you found people in all these countries. You've tried to open up these bank accounts. You've gone through like hundreds of hours of support. You spent 1,000 hours in banks. You've hired lawyers in 2 continents, and you still haven't done a trade. And there's still stuff blocking you, and it just sort of feels like, Jesus, like, what the fuck are we doing, right? Like, this is not going to work. Like, we keep putting effort in and nothing comes out. Like, And it's very dispiriting, like, for a lot of people, because it's just like, we spent 2 months and done an enormous number of wacky things, and we aren't yet making millions of dollars. And that's honestly the world's prior. If you spend months doing a bunch of wacky things, you usually don't come out with a fortune. And so, but what was actually happening was exactly what it looked like, which was there were 30 hoops, and we didn't know how many hoops there were, because some of these hoops just got presented to us at the last minute. But we gone through 20 hoops. We didn't know how many there were going to be. We sort of felt like we could do the trade if we got through all of them. Like, then we went through 25, we still weren't making any money. Then finally we did number 30, and then the next day we make money. And so it really was like, all of a sudden, you finally get rid of the last blocker. You didn't know what it was, but eventually you just try and do the trade again, and this time it works. And so, for all the sort of like all the shit you had to go through, in the end, the answer was like, no, your analytical approach was exactly right, and your instincts that this feels Sisyphean and hopeless were just wrong, because in fact, it was just going to be hopeless for 29 steps and then work on step 30. And you just had to like keep grinding away till he got to step 30 without giving up.
What an extraordinary story, and a life lesson in addition to being, an extraordinary business case.
Yeah.
It's interesting. You almost run into these weird principal agency conflicts as well, right? When you talk to someone who works at a bank, like, that guy can like potentially get fired on the downside. It doesn't impact his bonus on the upside.
Oh yeah, right. It's like you're talking to these people like, Jesus, like, I could get fired for giving you a bank account, and like, I'm not making any of this money. Like, literally, I make no more money than if I just sat here fiddling around.
Right.
Like, and that's actually what stops a lot of these things from happening, is just like, the number of times we're talking to someone and we're trying to negotiate a deal, and it doesn't happen. And finally we're like, let's just get this straight. If this goes south, do you get fired? I think I was like, yes, I definitely do. And we're like, and your company doesn't pay bonuses, right? It's like, we got like $1,000 last year. And so like, all right, cool, we get it now. Like, it's obviously you don't want to take a risk here, right? And so a lot of this is like this dog and pony show of like making sure that, like, it's not just being compliant, but also making sure that you've like given sufficient evidence as cover for that, the people you're dealing with, that they're no longer worried about getting fired. That they feel like if their boss asks them what they did, they can hand them a pile of paperwork and be like, I did all this paperwork. And the boss is gonna be like, I'm not fucking reading that. You got away with this one,
Even the name Alameda Research, I understand there's a backstory on why research is in the company.
Yeah, I mean, it's sort of a quick backstory, which is just like, I don't know, it doesn't sound bad. It's like, because like, I don't know, just like, don't want to give banks reasons not to give us accounts. And sort of like, especially in 2017, if you named your company like, we do cryptocurrency, Bitcoin, arbitrage, multinational stuff, no one's going to give you a bank account if that's your company name. Among other things, a terrible company name. But also, they're just going to be like, oh, geez. Yeah, no, we've been warned about companies with this name. Like, we're, you're going to have to go through the enhanced process, and I don't want to bother with that right now. It's almost lunchtime. So, but everyone wants to serve a research institute.
Michael Lewis, if you were watching, I would love to see this book get written. It's just such a great story. And by the way, how were you funding it at this point in time? Was this, you're just sort of bootstrapping people you met along the way?
Yeah, I mean, it's like what happens when you send a market order for a ton of capital for a weird crypto startup as a 25-year-old in 2017. Worked about as well as you'd expect. Got a decent amount of capital pretty quickly. It was took a ton of time and effort and lots of strings attached, and very, very, let's just say, high interest.
Yeah, I would imagine. So let's talk about FTX. What was the backstory behind spinning it up?
Yeah, I mean, it's sort of spent a year trading. It's late 2018. And you'll notice in that story I told that like some of the problems that we ran into were like dealing with banks, but some of it was dealing with exchanges. And there's a lot that wasn't very good about dealing with the exchanges. There's a lot that sort of one would have desired to be better. And and I sort of am only talking so far. I've only talked about the easy parts, which are the spot markets, right? Like I haven't yet talked about what happens when these exchanges tried to have a risk engine or like liquidation engine. It did not go well. Like some of them, you look what they're doing, you're like, that's a guy, that's not a program. Like that's a person liquidating those accounts. If he's asleep, there are no liquidations. And and so it is a total shit show. And it's $1 million a day of bleed coming from this. And we basically just felt like, Jesus, we can do better. Like this like these products are a total mess. These are not professionally built products. These are not like thoughtfully built. This is what happens when you have a tiny industry that grows up overnight, is you have sort of accidental billionaires, with accidental unicorn companies that are not would have survived sort of a competitive evolutionary process, but that's okay because they didn't need to go through one. And
Right.
so we felt pretty strong like we could just build a better product. We also felt like we'd probably flop, because I don't fucking know how to get a user. I'd never run a like customer facing business before. I never tried to market or build a brand, or and it's like I don't know how we even do that. We thought it's like 80% chance or so that we just fail to ever get traction. But it just seemed high upside enough that it was worth going for.
Yeah. So let's talk about where FTX is at today. For people who don't know, give us the 50,000 foot level on the services you offer, what it is you do, how you're different from Coinbase, and some of the things that you do for your clients.
Yeah. So, we've been building out over the last few years. It's grown a bunch. So it's now, depending on how you count, like the second or fourth biggest exchange globally. As we had, about $18 billion of volume in the last day. And we've been averaging something like that recently. It's a lot of the volume is in futures. That's where the biggest bulk of it is. But we also have spot markets, fiat on ramps and off ramps, other derivatives, tokenized products, OTC. We have prediction market contracts. We had the world's second most liquid Trump 2020 contract after Betfair, and a bunch of other stuff. And I think in general, like the thought is basically like we want to build the product that traders will want to use, and we want to try and hold ourselves to a really high standard with it. We definitely don't want to feel like like it's good enough and we're going to stop there. And so it's sort of constant iteration, constantly building out more pieces of this, and just trying to get to the point where it's the best product we can make. And we'll never get there. There's always more to do. But compared to Coinbase or sort of other US exchanges, it has massively more products. I mean, Coinbase just has spot markets. FTX has spot markets, derivatives, spot margin, borrow lending, and all the other stuff. It's got sort of like a completely rebuilt tech stack. So, it doesn't go down during volatility. It can sort of, sustain market movements, and generally let you do what you want to do with it. On the other hand, Coinbase started up like 8 years ago or so at this point. And, at the time they started, they're just like, we're not a lot of crypto exchanges. And it's a fantastic business decision on their part. And one thing that it's meant is that they went and acquired tens of millions of users, before we even existed. And that's obviously been fantastic for their business. And it's meant that they have they really have a huge retail user base, which is incredibly valuable to them. They're charging like 3 or 4% on average on their mobile app, and that's sort of like what their business looks like.
And you're charging somewhere between, I guess, like 1 and 3 basis points. So I mean, it's a huge difference. I mean, two
Yeah,
for people who don't know, 2% is 2 to 3% is 2 to 300 basis points. So it's a
that's right. So it's
hundredfold
about
difference.
a factor of 100 difference in
Yeah,
fees. It's pretty big.
yeah, it's massive. You're also doing things like fractionalized U.S. equities trading. Tell us a little bit
Yep.
about that.
Yeah, so we're partnering with a German broker dealer to offer stock trading on FTX, and so you can trade Apple and Tesla and SPY and whatever you want there. And some cool things about it are that we sort of again rethought like how to do it and rebuilt it, and it's sort of unconstrained in the way that a lot of the current stock exchanges are constrained, and so you can trade 24/7 on FTX, including the stock. So, you can buy Apple at 2 a.m. Eastern time on FTX. You can cross margin them with everything else. You can use Apple as collateral for Ether, or Tesla's collateral for Bitcoin, or yours is collateral for SPY, or whatever combination you want. We cross margin everything. You can buy fractional shares. There's no minimum of 1 share thing. And there's sort of some really cool stuff on the horizon for that.
Yeah. So what's the risk in terms of the liquidity and those kinds of issues when you're trading outside of traditional market hours?
Yeah, and I think that is a real thing. And in the end, like, there are liquidity providers providing liquidity for these stocks, but when there's tons of global liquidity, they're going to be able to provide a lot. When there isn't, they're not. And when every other market is closed at midnight Eastern, there's just not going to be nearly as much liquidity in anything, but especially in U.S. equities.
Right.
So you often have more impact. And in general, like the prices can be weird. I mean, they could trade. I mean, trade at anything, and in general, like, there's there's sort of this sense of like, oh, people generally know about what this thing's worth. They're looking at other exchanges. And so it's like unlikely you're gonna have huge impact. Like, no, at midnight, sort of all bets are off to some extent. And so, and you should be conscious of that. And you should be conscious of the fact that maybe news has come out in this and you don't know, and there are no markets to look at for it.
Right. So to circle back, relative to Coinbase, how are you guys able to do business at a fee structure that's a factor of 100 from some of your competitors? That's a pretty extraordinary advantage.
Yeah, I mean, I think a lot of this comes down to the products, right? Is that, like, because we've built out a huge product suite, and especially on the derivative side, we have a ton of volume. And so, where Coinbase only has a few $100 million trading through their mobile app each day, and we have tens of billions trading through the derivatives. And that's how we scale, is by trying to offer products to all users, not to casual users, but also to power users, to institutions, trading firms, and whoever else has demand for crypto. And there's a lot of hedging going on FTX. There's a lot of taking positions. There's a lot of market making, and it's just generally a efficient venue for getting off significant size trades. And so, because that we're just able to scale it up a lot bigger than what most purely spot exchanges see.
Yeah. How would you characterize the current state of play in the crypto exchange markets right now? And if you could touch on some of the distinctions between the derivatives market and the spot market.
Yeah, so there's more derivatives than spot volume, and that's usually been true. It's true in most asset classes. It's something like 2/3 derivatives, and the derivatives are where most of the price discovery happens, although not all of it. It's where most of the deltas are put on, most of the hedging is done, most of the volume happens. The spot markets are where people get into and out of crypto. And so if you need to get fiat liquidity, you're doing it through a spot market, or if you have dollars and you want to buy into Bitcoin for the first time, you're doing it through a spot market. And there's also sort of regional ones. You have Upbit and Bithumb in Korea, Bitflyer, Bitbank in Japan, and all these other exchanges that sort of specialize in fiat on-ramps for different jurisdictions and different currencies, and function more in terms of needing deliverables and or fiat currency than being able to efficiently put on positions. You also have the U.S. versus non-U.S. divide here. There isn't a clear regulatory structure for crypto derivatives in the United States right now, and so all the derivatives platforms don't service Americans, and so the U.S. volume is largely going up on the U.S. exchanges, which are entirely spot. With Coinbase being the biggest of those.
Yeah. To change gears here slightly, I imagine one of the ways that many people who are not as close in the crypto space as you are have heard of FTX was through the Miami Heat stadium renaming. I think you guys paid around $135 million for that. Tell us a little bit about that decision, why you made it, and what the significance is for the organization.
Yeah. So, we were renaming, the Miami Heat stadium to be FTX Arena. And I think the biggest thing there, and there's a lot of things that we're exciting about, including getting to work with the Miami government that's been super pro crypto and pro innovation. But, I think important pieces of this are that, we've always been product first. That's our strength is, we feel like we have the best, product in crypto. And I think that that's generally the sentiment. But we are also the latest of all the major exchanges. You have to scroll way down the list to find another exchange founded after FTX. And so because of this, a lot of major exchanges had tens of millions of users before we existed. And what that means that we have really positive, brand and really high favorables, but we don't have nearly as much name recognition as a lot of the older exchanges do. And so our goal is, how do we massively build out that name recognition and reach a lot of the users who just don't know about FTX right now without sort of diluting our brand and without just sort of becoming like, oh yeah, there's another like generic crypto billboard type thing. Which maybe it's good, if we do some of it, but it's not, I don't know, it's not the most exciting thing. And this is one of the places that we ended up with in terms of like sort of big things we could do that would have big impact, that would get a lot of recognition, but also be kind of cool and give us a lot of creative room to have something much more interesting than just plastering the airwaves.
Yeah. Are you a big basketball fan? Do you get courtside seats along with this deal?
We get some perks, and I do watch way more basketball than I should, given given how much baseball and football I also watch, and that I also have a job.
That's great. So let's talk a little bit about the FTT token, currently listed on CoinMarketCap at a capitalization of just under $3 billion, fully diluted market cap of over $10 billion. Significant numbers. Tell us a little bit about what the token does and why it's significant to the business.
Yeah, so it does a bunch of things. If you're an FTX trader, it gives you lower fees and gives you rebates. It gives you staking rewards. You can use as collateral and a bunch of other things. And then there's also weekly buy and burn of FTT, equal to a portion of the fees made on the exchange, to sort of give back to the FTT holders.
Yeah. Talk a little bit about the Blockfolio purchase. That's something that's interesting. Tell us about what the functionality is and why it was interesting to you.
So, I think going back to sort of the theme of the Miami Heat arena is that, we really want to be getting our name out there and reaching a lot of users. And we think we can build great products for them and have built great products for them. And I think one natural partnership there is basically finding companies that have, huge user bases, great brands, and really loyal followings and have been really good to their users, but who don't have the tech or finance to build out the trading opportunities that their users want. And so that's sort of where Blockfolio was, and it was a natural match. So we acquired them middle of last year, and then a couple months ago we launched trading and investing in Blockfolio, back ending onto FTX.
Yeah. One of the things that you said, and you said it almost in passing in an interview with CoinDesk a few months ago that I found absolutely fascinating. You were talking about your user interface and the way that you engage with your clients, and you talked about how people want as much information as possible, how there's this demand, this craving for education in the space. Tell me a little bit more about that.
Yeah, it surprised me a little bit, and my prior was like people just want to go straight to the product. They don't want to see any articles or any explainers or disclaimers or checkboxes or
Right.
anything like that. And I think that turns out to mostly be wrong. I think we've seen just huge demand and appreciation from our users for all of the explainers that we have. For any time that we add, I think at typical ones we'll add sort of like before you can trade a product, you have to take a quick quiz. And we sort of thought this would really piss the hell out of users, and instead I think they appreciate it. So they get
Right.
to learn something about the product. And people read our Zendesk articles, sometimes religiously. People pore over every detail of a product. They ask really detailed questions. They give lots of feedback. Especially the power users or the people who are not currently power users but are excited to get involved. They really care about this and they really want to engage and learn.
Yeah. Finally, I have to ask this question, which I'm sure you've heard a million times, which is obviously with the Coinbase IPO, it hasn't been such a great month for it, and it's still trading at a market cap of about 60 billion. Are there any thoughts that you have for FTX going public?
I'll say what I usually say, which is it would be negligent of us not to be doing our due diligence on it. And no concrete plans, but where we want to make the right decision for the business, and it's something we have to consider.
Yeah. So, okay, once again, to change gears here, the Serum Project, of which you are a co-founder, a DEX, a decentralized exchange. This is really interesting, I think, for a lot of people to get their heads around that the CEO of one of the largest centralized exchanges in the world also spun up a decentralized exchange. Tell us a little bit about that decision.
Yeah. So, DeFi was getting really hot, and in the end, like we could have done something like like BSC or Hiko or the sort of centralized exchange chains, but we felt like it wasn't the right fit for us. And the reason is that with FTX, we want to build the best centralized exchange we can. And if people want to use a decentralized exchange, we want them to use a really fully decentralized exchange, which has all the advantages of DeFi. And we just weren't as excited about sort of a like mushy thing halfway in between. And so basically what we thought was like, is there something that like is the DeFi ecosystem just good as it is, or are there things that we could be doing to move it forward in ways that we think we could have real impact on it? And that's sort of where Serum came from, was being able to build a scalable decentralized exchange that could have full order book, matching engine, limit orders, provides the whole shebang, and that people will be able to interact with in a way that was fast and cheap and felt natural. And that wasn't really a thing that existed in DeFi. And that's sort of what sparked what initially sparked Serum.
Yeah. So let's talk about where Serum is today. You mentioned some of the advantages to the DeFi space. Tell us what those advantages are and how they're being implemented right now in the Serum project.
Yeah. So, I think that the biggest things are, things about scalability. Is when you look at sort of the design of most DEXs right now, the sort of like what you see again and again is basically like, products built to serve a few thousand users. Products running on 10 transactions per second for an entire ecosystem, which is a tiny fraction of what like FTX uses. And they're really cool, sleek products. But the problem is that they just don't scale to hundreds of thousands or millions or billions of users. And so what we were thinking is, what would it take to get there? And basically that meant building on a chain that could scale to millions of transactions a second. And Solana is sort of one of the only chains that has a roadmap to get there. And then it meant once you have that, building the products in a really unconstrained way, in a way that is sort of how you want them to be built rather than how they need to be built to fit the blockchain. And so being able to build out full exchanges, borrow lending, and social media and a ton of other things that we're seeing popping up in DeFi, and that we think Serum and Solana can really help be a substrate for that by offering liquidity, speed, and everything else that it's just hard for people to get anywhere else.
Yeah, Solana really is a huge part of the story. That the coin that you selected. It's such an interesting question.
Yeah, no, it is, and it's just like it's just a lot more scalable than almost any other chain is, and I think that just really matters. It's just like it can be 100 times bigger than the other ecosystems. That seems like a lot.
There seems to be this thing about factors of 100.
Yeah, there's you sometimes get really big factors between things, and I think people sometimes sort of like underestimate how much that matters.
Yeah. So talking about scale, talking about size, I want to talk a little bit about effective altruism. Some of your giving, it's an important story. We must say, of course, that you frequently are at or near the top of these crypto rich lists. The phrase or the tagline often tagged to you is, making $10 billion by age 28, which must be like weird and surreal and great, but also like a weird and mixed blessing in some ways. Tell us a little bit about how you think about that and how like you function with that like hanging over your head.
Yeah. I mostly don't think about it. Mostly just focus on, building stuff and
So no
whatever,
Lambos for you, Sam.
not so much. But in the end, on a longer time horizon, my goal is to, have as much positive impact as I can on the world. And, right now it seems like a big part of that's going to come through being able to donate to organizations that do a lot of good. And so, that sort of was one of the driving factors between getting involved in this in the first place, was seeing an opportunity to be able to give a lot.
Yeah. So what makes specifically effective altruism different? We know that Bill Gates, for example, has done a lot of thinking about new novel ways to give, re-engineering it. Tell me about your philosophy.
I think a lot of other people, including him, have done a lot of great work. But I think one of the biggest thing is basically like, thinking really hard about maximizing that, about how can you do the most good and which causes and which organizations can do the most good, per dollar that you give them. And so, not so much thinking about it as like, where can you do good, but as if you're going to try and do good with some amount of resources, like what's the best place to try and do it.
Sam, we've covered an immense amount of ground here today at all the companies that you work for, a lot of different concepts, a lot of different ideas. Give us some final takeaways, some of the most important things that you'd like to leave our viewers with.
Yeah, I think the biggest thing is just like, certainly on the FTX side, we'd love you to try it out if you're interested and give us feedback. I think in general, like, just think about, how we can build out the crypto ecosystem, the general financial ecosystem to be, have the best products and best user experiences. And, you can think about what you can do on that front. And, I think prices come and go. And, but ultimately, the things that you build are a lot of what determines those. And I think that's sort of what we like to focus on the most.
Yeah. Sam, great conversation. Thanks for joining us.
Thank you.
Thanks for watching, everyone.